Hello there, welcome back to my channels Capital Investments and Options with Salman. So my firm name is Capital Investments. My name is Salman Sheikh and you are watching Options with Salman. So right in front of me is a Nifty 50 chart. Okay, let's start with the monthly analysis of Nifty 50. So here you can see on a monthly data. So let me remove the drawings first. Let me remove all the drawings. Five drawings. Okay. Now there is a two overlay. There is a global liquidity index. So that is the overlay, and we also have a MACD indicator. So on the monthly, as you can see, that after a long time we have crossed a negative over here. So we had already become negative from the top, but in the MACD here after the third month we had given the negative signal. Okay, so the last time it gave a negative signal was here somewhere around here. Okay, but afterwards it gave negative signal. Actually the market started moving upward only, and despite the MACD being lower, the market was moving upwards, and now again the market is going up. So here we can see that there is some requirement of adjusting the MACD. Probably the fast length can be a little bit of shorter, maybe 9, and like let me see. Okay, so if we adjust it to the 9 and we do the slow length something where like 21, okay, 9 and 21, and we do it. Okay, okay, so that is fine. I don't think that is making much of a difference. So what we can do is basically we reset to defaults, reset settings, and that is okay. So monthly is not giving us clear indicator. So monthly the MACD is lagging quite a lot. Let's check the weekly. So here you can see the weekly. In the weekly we get a signal much faster. So here you can see when the week started falling down, it immediately gave us a signal. So the MACD is quite decent in weekly, and here you can see the global liquidity index. So this is the global liquidity index. So here you can see how much money globally there is in all the markets, like how liquid are the global markets, so overall global markets. Okay, so here I'll just show you the long term chart, and there we can overlay. See, the liquidity started rising here, okay, in the global markets, and that's how the Nifty 50 is also rising. Now for a short while the global liquidity fell down. When the global liquidity falls down, it affects the Indian market also. So Indian market fell down. Then the global liquidity far exceeded the rise than the Indian markets. Okay. Now again afterwards, now after March 2022, the global liquidity is like in choppy phase, and despite that our market was rising. Okay, but you can see there are certain peaks and certain troughs that we still are following. Now is following very sharply over here, where we could see that the global liquidity actually index was quite high, and that's why our market also fell. Our market was also high, then global liquidity index fell, and that's why our market fell. And then again when the global liquidity is rising, our market is rising along with it. Okay, so global liquidity is quite kind of a lead indicator. Okay, so wherever the global liquidity was sucked out, hence our market was also, money was being sucked out, and whenever global liquidity was coming in, so later on our market was started rising after that. Okay, now again it's trying to go down, and hence there is uncertainty, and global liquidity will remain uncertain due to this Trump tariff wars and stuff like that. And as you can see, now let's come to the daily. So here you can see on the daily also the global liquidity rising and now falling. And here today we are sitting on Friday 28th of March, and on Monday there will be a holiday, and directly there will be Tuesday. Tuesday I think market will fall further most likely. So you can see the Nifty futures, the gift Nifty future is 517, whereas a Nifty was 519. So there should be at least 100 200 point premium, which is not there. So we can see 100 200 point minimum fall, and this is because also Trump will come on Tuesday, I think Wednesday, 2nd of April, and announce the tariff war and the retaliatory measures. Okay, so that is why our market is like that. Now what is the next step? So what is the support and what is the resistance? Yes, so for that we'll just go and check this. So before that, just check the weekly candle. I'll just show you something. So here we are going down in every week. Okay, this was quite a bullish candle, and we required a confirmation, but this is not a confirmation. This is a gravestone doji, which implies that probably, most probably, the market is confused or will probably go downwards. So the trend will probably reverse. Okay, so the next week I think the market will be downwards, and here the MACD was trying to close up upwards. Okay, but I think this is the king. See, it tried to go upward, then it came down. This also I think it was trying to go upward, but I don't think it will cross. It will just travel downwards. So that is how it is going. Now what are the levels and what are the support and what are the resistance? For that we need to see the volume profile. See, you see the fixed range volume profile, then you can see this is the crucial level. So when the market fell from this to this level, okay, the highest volumes were available at this level, 23,500 600 levels, and that is still intact, and that's exactly where the market took resistance. Now now what? Now we delete this fixed range volume profile, okay, and we plot another fixed range volume profile. Now when the market started rising from this channel, okay, then what was the support? So here was the support. So next time when the market comes down, you can see that 22,500 400 500 levels will become a support, and these levels is a resistance. So if so there is an option strategy that you want to play out, then you can probably do a straddle at 23,000. Okay, so for the medium term, like next week maybe you can do this strategy, 1 week strategy, for next week or next 2 week strategy, with an iron fly. So you should do this iron fly. You should sell a straddle and then buy these hedges of 23,500 and 22,500. So this is just a sample strategy. Although the risk reward and everything is up to you. I am not a SEBI registered advisor. Okay, if I was there and I wanted to do this, I would have probably done this strategy, a weekly strategy. But right now I am actually into quite a long term options. So December options, premiums of, or I mean sorry, the margins that are utilized for December options have reduced. So I think I'm moving to December options. So for the December options, as you can see, so the December options, I think this will become a crucial level, the 23,500 only. So someone wants to play out, the person can play out 23,500 iron fly. And okay, so for December options, I'll just guide if someone wants to play out. So this is the weekly chart, and I think we should go to monthly chart, okay, and we should see like something from a January, okay, January 2024. You can see the fixed range volume profile. So here the market started rising, okay, from year to year if we see, then this is the support basically 22,500. So here the market can go down further, and even from this levels also the support and resistance is coming out to be same. Okay, so here actually what you can do is basically go ahead with something like you can actually buy out. Okay, you can buy out most likely. This range may play out until December or may not play out until December, I cannot say, but if it breaks then it's going to be huge loss for you. Okay, so what you can do, you can either play for an iron condor make maybe 24,500 and 2,500, you sell it, and then just 500 points outside you buy it, make it an iron condor. If your iron condor breaks, then you go up and play the directional, okay, for December. But or another strategy is again the iron fly, but then the range is very small. Or the third strategy is like you actually buy these, okay, you buy these two, okay, considering there will be a breakout. So 24,500 and 22,500 you buy it considering there will be breakout, and you sell it like 26,000 and around 19 20,000. Okay, so whatever you get a decent premium, and whatever strike prices are sellable, but here you have to sell more and buy less. So maybe if you buy one lot, you have to sell 3 or to 5 lots, so something like that, and you have to recover the premiums, and you expect that in the center there will be like minimum profits. Okay, but if it goes and gets settled somewhere around here, this region or this region, then you will get a higher profit. So you can play out for that also. So anyways, the risk reward and everything is up to you. You please analyze and do it. So I was just trying to explain you based on this market scenario, there is lots and lots of uncertainty. Okay, and there is a very good support and resistance actually we have faced. Is these two levels are of very good support and resistance. So I'll just create a horizontal line. Okay, this is the ultimate level of support and resistance. So I'll just create a 4 point line. Okay, and this is a, I'll just clone this, and this is the level. Okay, so these two levels are going to be very crucial, and I think market's going to be spending some time here, at least for next week. And if it keeps bouncing here, then I think we will probably get a Darvas box setup over here. Darvas box setup, you can read about the Darvas box, and then whenever it breaks out, be it upward or downward, then that trend will continue for quite a long time. So that is our analysis for today. Hope you enjoyed watching the video. Thank you so much. Bye.